went somewhat aggressive on a company, on a bank, on a small bank. I'll tell you the name, Newtek. I'm sure you know Newtek, right?
Right.
With Barry's days. I went pretty aggressive after the stock. They did a transition from being a BDC, which doesn't pay any taxes on the corporate level and passes that through, to an actual C Corp and bank holding company. They bought a bank, so they were transitioning to becoming a bank. And stock dropped from like 35 to probably say like 17 or so, 16 or so.
Right.
And to me, it became interesting. Barry, the CEO himself, is a he's going to make most of his money from the shares that he owns, and the company was profitable before. Paid a nice dividend. They're going to have a transition where the dividend is going to drop, or they actually they're not forced to pay dividends now as a C Corp. So a lot of the companies that the funds and the other investors who are like they really need a dividend, got out. And so he announced afterwards that they probably will do a dividend, and they ended up paying again a smaller dividend amount. But again, buying a bank and transitioning your model completely to a bank model, very different.
Right.
And then so it got beat up pretty badly after when Silicon Valley Bank went under and Signature Bank went under. And I wanted to go much bigger on it. I mean, it's still a pretty big position. I wanted to go bigger on it, but it was tough during that time because they didn't have the same structural issues that a lot of the banks have out there, which is fixed rate loans that they had outstanding, right? What's great about Newtek is they do small business loans, SBA loans, and they're all variable rate. So it's prime plus 3% or plus 3.25%. So as rates went up, again, as their cost of funding goes up, right, their lending goes up as well too. So they keep a similar spread.
Okay.
That's one of the reasons why I wasn't as concerned. But my bigger concern, just generally, is the amount of the potential new regulations they can put on the banking sector, especially smaller banks, right, which end up costing and hurting the whole industry. Which is probably why the industry, got hurt. But I don't really see the same type of risk that a lot of the regional banks have in terms of getting their deposits pulled. Because I don't think any bank can survive a bank run. But Newtek, I actually opened up an account with them, a savings account. They were paying like 5% on their savings. I think it's like 4.75 or 5%. I don't know what it's at now. It's probably still in that range. But they had so much demand for it, they had to close that account sign up.
Right.
Like they're not taking any new accounts. I don't know if there still are as of today, but as of like a month ago, they weren't taking any new accounts. Mm-hmm. So that was one of the risks, right? When you turn into a bank, is can you raise deposits? And they've been pretty successful, and they pay a nice rate, but they're getting almost like around 11%, 10-11% interest on the loans they're lending out. So now you start thinking, okay, well, are there going to be defaults on those loans? And again, SBA guarantees a big portion of it. I think they guarantee it for 75 or 80%. Mm-hmm. So there's kind of like no risk there. That's kind of like Treasury is backed by the federal government. And then the remaining amount, they take the risk on that. And so a lot of these businesses, it's not just the business assets that are the loan is against, but it's also all the business owners have to put personal guarantees on these SBA loans. So usually Newtek does a good job of seeing what other assets, like they own their own home and other things. So even if a business starts to struggle, they're very motivated to pay off, work out these loans too. So, probably what happens in most of the cases in these businesses, and I see it a lot with like highly levered companies, or if you look at REITs, same thing as well too, they stop investing in like growth CapEx when the interest rates go higher because they're just paying more towards interest, and unfortunately that's taken up most of their capital.
Right.
So I don't see it like too risky, but again, I say the bigger risk I see here is regulations being put on smaller banks,
right,
which cost them money and typically hurt profitability. So I actually think like in a recessionary environment, I've heard it already right now, a lot of these smaller banks aren't lending unless it's like an immaculate, it's like a multifamily property that's worth maybe like $10 million, they'll lend like $3 million against it. Like every bank is like is looking for that type of stuff, right? But like when it comes to like lending against businesses, it's a tough environment out there. And so the SBA is typically the lender of last resort. So I think like, you know, if a company really needs cash, you know, and they can't get it somewhere else, or they're looking to grow and they can't get it from somewhere else, you know, like Newtek will probably have a lot more flow, like deal inflow coming in to their, you know, business in that situation. So actually today, the CEO, Barry, bought around $30,000, I think, worth of stock.
Okay.
So that's always a positive sign as well too.
Right.
And I think the stock today is around like $17.50 a share. I think just like based on earnings, I think they'll probably be able to do maybe like $2 in earnings or so this year. And I think next year they can ramp that up to like around 3. And I think for like a growth bank, like a 10 multiple is like easy, but like probably should get like 15 or so. And so, you know, a 3 and a 15 multiple, that's a $45 stock price.
Right.
So that's kind of, you know, I think probably could get a 20 multiple, but again, with like the bank, like currently, if you look at it, I want to be a little bit cautious and conservative as well too. So, you know, if you can get that 20 multiple, that's a $60 stock.